Three big US banks report earnings this Friday: JP Chase, Bank of America and Wells Fargo. How could things change for the sector, having seen the dollar index strike 14-year highs? Christopher Vecchio joins us now from DailyFX. Chris, it's been well headlined that these quarterly US earnings will show up how detrimental the stronger dollar will be for US exporters. But what does the strong dollar do for banks?
Well, it depends on whether or not these banks have significant overseas exposures. Banks that do, of course, will face the headwind of a stronger dollar weighing down on their foreign revenues as those local currencies, if it's euro or pound, are converted back into US dollars. But on the other hand, there are some benefits to a strong dollar considering the context in which it's occurring in. It is a rising rate environment which could be beneficial for banks over the course of 2017.
Well, JP Chase and Bank of America are both heavily exposed to overseas markets, but Wells Fargo is not. What would this mean from a trading perspective?
Well, if Wells Fargo is more about the domestic U.S. economy, the rising rate environment will help them. They're able to capture a larger net interest margin thanks to the higher long-end yields. But for banks like Bank of America or JP Morgan, which may have some unhedged overseas exposure, and as a result, the profitability of some of their multinational operations will be a little bit lower. I think that you'd see those two stocks potentially struggle relative to Wells Fargo. And if that's the case, given that the rate environment should still be beneficial for banks over the course of 2017, it could represent a buy-the-dip opportunity in stocks like JP Morgan or Bank of America.
Well, let's talk about rates. The Fed's already started to raise interest rates in the States. How will this affect the sector, assuming we get the 3 rate rises this year that the Fed has warned us about?
Well, the way that banks make money, of course, is the difference between how much they receive from the loans that they give out versus how much they pay out to their depositors, or retail mom and pop people like you and me. And so as interest rates rise in the long end, they're able to charge more for mortgages, and in turn that means they're able to increase their profitability. So a bank like Wells Fargo, which has significant operations in the United States, assuming the housing market stays together for the foreseeable future, then they should be able to benefit in this environment. I think generally speaking, 2017 should be a better year for banks than we've seen in several years. That said, given the fact that we're also looking at a significant shift in U.S. fiscal policy coming up, I wouldn't discount the fact that if we hear about U.S. credit concerns down the line as U.S. deficit spending increases once more, that banks could come back under pressure in the second half of 2017.
OK, Chris, thanks so much indeed. Christopher Vecchio there, joining us from DailyFX.